From Yahoo Finance, this is Ballots and Dollars, a podcast about the politics that affect your pocketbook. I'm Rick Newman.
And I'm Alexis Christoforous. Today, we are waving to the public and talking about the R word. Recession.
Oh my God.
Recession.
I can't believe you said that.
I've been saying it a lot lately.
Oh my,
because it
no,
looks like
no family standards here.
it looks like the Democrats are running on the recession platform. They're trying to scare us all into thinking there's going to be this horrible recession. And of course, Trump is telling us if you don't vote for me, we're sure as heck going to fall into a recession.
It's a little unsettling.
Just a little bit.
I mean, because if you're opposed to President Trump, there's an incentive for you to hope there is a recession, because a recession would basically sink his presidency. He might be sunk without a recession. His approval rating is so weak. But if there is a recession, it would almost certainly pave the way to a replacement. And we know from history it's almost impossible for an incumbent president to get reelected if there is a recession that people feel, and if they're watching people get laid off and the unemployment rate is going up and people are starting to hoard money because they're afraid of what's coming. The president does not get reelected. But we're not in a recession right now, almost certainly. And I will actually stick my neck out, and I am going to forecast that we are not going to have a recession before the 2020 election. I think that there just is not enough going wrong. It's not as if too much is going right. I think there's just not enough going wrong to cause a recession by, within the next, from now, we're talking 15 months, or one that at least feels like a recession by the time voters go to the voting booths in November of 2020.
Well, of course, it depends on who you talk to. And I talk to a lot of economists and strategists every day here at Yahoo Finance. And some of them, in my sort of anecdotal consensus here, is that we'll probably see some sort of mild recession. And they do stress mild. In Q2,
is anybody putting a time frame on that?
Q2 or Q3 of 2020 is what they're saying.
Okay.
That it'll be
by this time next year, within a year.
Short-lived, and my question is, if it is at that time, and it is very
Trump's
mild,
dead.
does Trump? You think so? See,
absolutely.
I think Trump survives that.
Well, how?
Because there's not enough pain for enough people to say this is horrible. We need to put somebody else in office. Because at that point, they know what they've got, and they figure, you know what? If this is as bad as it's going to get, then let's just stick with what we know.
Okay, so what are the characteristics of your hypothetical recession a year from now?
Well,
the unemployment rate is 3%, 3.7% now. What does it go up to in your
5.7?
I don't know if you can have a recession with unemployment that low. I mean, we've had that used to be almost normal for a non-recessionary time.
But if you look at the definition of a recession, it is 2 back-to-back quarters of negative or flat growth. So we could have negative 0.1 growth. What does that really mean to the average person? Probably not a lot. And if they're not feeling it in their day-to-day lives, are they really going to take it out on President Trump to the extent that he doesn't get reelected?
Well, let's play this out. I think they would, and here's why I think they would. So if, let's say you're right, and we go from 3.7% unemployment now, let's say it does go up to something that's still under 6%. But to get from 3.7 to 5.7 to go up by a couple of percentage points, that means we have to have not just hiring stagnates, but we have to have layoffs. So people would be losing their jobs. And I think one layoff has a huge multiplier effect on confidence. Because first of all, companies don't lay off one person. They if they feel they have to cut back, they lay off. I mean, depending on the size of the company, obviously, they lay off a couple hundred or maybe even a couple thousand if you're a big company. And if we are in a recessionary scenario, well, laid off people are not finding it easy to go just get a job at the next company down the street. So, and I think when ordinary people start to hear about layoffs, even if it doesn't directly affect them, or it may affect them, but they're not the person laid off.
It works on their psyche.
I think that has a very pronounced effect on confidence. And confidence is what people. It's that intangible thing, which is people's willingness to spend money. And if consumer spending drops by 10%, so it's not hard to imagine, or let's say even 5%, that has a big effect on the economy, and then it becomes kind of self-fulfilling. So if you start to see a slowdown in consumer spending, that's the biggest part of the economy. Then you're going to have more layoffs by companies saying we need to prepare. I mean, companies they can get rid of people easily here in the United States, and they tend to be proactive or preemptive about that. So if they think bad times are coming, they want to shore up their balance sheets ahead of time. So you get in that cycle where I think it's hard to, even if it's a mild recession, we don't know it's going to be a mild recession when we're in the middle of it. And I think some people are still very scarred by the last recession, which was terrible.
So, Rick, do you think that maybe some Democrats are actually going to bed at night wishing and hoping
Absolutely.
for a recession? I mean, that seems a little unpatriotic to me.
Yeah, I think some people are conflicted on this.
Who amongst the candidates do you think may be praying extra hard for that recession?
Boy, I don't know, because I'm only thinking about maybe 5 candidates I think
the ones
really
who have the
really
best
have
shot.
a chance. So that's Biden, Elizabeth Warren, Bernie Sanders, Kamala Harris, and Pete Buttigieg, who is kind of just barely hanging in there. It would benefit. Look, it would benefit any one of them. It would benefit Democrats everywhere if there were a recession, because it would make it more likely that the Democrat will win in 2020. And not only that, when the Democrat wins in the general election, there's a coattail effect. The Democrat tends to pull more members of Congress with him, because more people just vote straight down the ticket, and you get more Democrats out voting in the first place. So I think it's not just Democratic candidates, presidential candidates, but probably lots of Democrats, whether they're lower tier candidates or just voters. I think people also think of a recession as in the abstract. They think of it as something that'll be like a thing that cable news talks about, but won't really affect them. But it will. I mean, a recession will affect ordinary people. Lots of them. I mean, totally normal in a recession that we have several million job losses. And we do have protective measures in place for some of them, extended unemployment insurance and things like that. But that doesn't mean you're made whole when you lose your job. You're not. You suffer a kind of a permanent setback when you lose your job, especially in a recession when it's not easy to go get another job.
Right.
Nonetheless, I think it is so obvious that a recession would sink Trump for good. And it would just give Democrats a higher comfort level right now that they can beat him. And I guess the good news about this is that no matter whether you want to, even if you do hope there's a recession, there's not anything anybody can actually do to trigger a recession. The only people who could potentially have enough power to actually contribute to the onset of a recession are the president himself through bad policy, and Trump might actually be doing that.
And through lots of tweets.
With his protectionist trade
that
policy.
Makes the stock market
and
nervous.
Bashing the Fed, and then also the Federal Reserve. I mean, so a policy mistake is one of the things that can cause or contribute to a recession. You or I can't make a policy mistake that will affect the economy, and despite what Trump thinks. By the way, I think there may even be some truth in Trump's accusation that the media wants him to fail, even if it means that the country fails in a certain way. I think there is he generates such intense emotional feedback that I think that's actually fairly normal, and I think that's probably more widespread than a lot of people and a lot of journalists would acknowledge. It's possible that, I think it's possible and maybe even plausible that the media is rooting for Trump to fail. At least portions of the media are.
Well, he certainly thinks so.
But I also think that Trump is completely wrong when he says the news, he calls us fake news, but he's wrong, we're real news, that we can actually eventuate a recession. I don't think the media
talk
has
ourselves
the power.
into a recession.
I don't think the media has the power, not even talk ourselves into it, talk other people into it. The public is very skeptical of the media. And they don't believe us. If we're bullshitting, they don't believe us.
Mm-hmm. You don't think if business leaders keep hearing on the news, recession, it's coming, that doesn't sort of – because they're human too.
Depends where they hear it. Are they hearing it from the news media? I don't think matters to smart business leaders anyway, because they have probably the best set of eyes into what's actually happening in the economy.
They sort of have a front row seat,
as anybody has, right? Mm-hmm. I mean, they see the business activity. They know what their customers are doing. Businesses measure capacity, down to 3 decimal points, and they can tell. Did factory capacity go up by or output or whatever? Did it go up by 1/10 of a point, down by 1/10? I have a friend who works in cardboard. He can tell what's happening in the whole economy by the capacity level cardboard plants are operating at, because cardboard boxes are used for shipping consumer packages, and when they fall off into the 90% or even the 80% range, that's bad news.
What's already in a recession are some of the S&P 500 sectors. We do have an earnings recession in particular sectors. If you look at tech, for instance, materials, industrials, they're all either flat or negative growth right now. Some of the brighter spots have been healthcare for obvious reasons, and also the banks, at least for now, until we get more negative yield yields around the world, and then their profit margins get squeezed. But at least for now, financials are still the place to be. So at some point, if enough of those, about half of the S&P 500 sectors are now in a quote-unquote earnings recession. If more of them start to experience that has to hit regular Americans on Main Street.
I'm not sure about that.
Depending on the sector?
I wonder if that phrase is not kind of inaccurate because a recession in the overall economy is declining is when the economy actually shrinks. That is not the same as when corporate profits shrink, because when corporate profits shrink, you still have profits. You just have less profits than you had before. And in a way, that's almost normal because there are various factors that affect companies. I mean, profits don't always – it's not normal for profits always to go up without interruption. If we all had perfect information and made perfect decisions, that would probably be the case, but it's not the case. So if profits go down, companies are still profitable at current levels of employment. So that can affect stocks, and it could affect –
hiring plans,
R&D via the stock market mechanism, which is the pass-through is, well, in order to placate investors and keep the stock up there with profits down, we have to cut costs, and that means we have to cut labor, and that means jobs. So what happens in the stock market sometimes stays in the stock market and only sometimes spreads to the broader economy. So while an earnings recession certainly affects stocks, I'm not sure. I don't take as a matter of faith that it also affects the real economy in the same way. I mean, by the way, do you think it has affected stocks? I mean, if
the
not,
earnings recession,
yeah,
not. You know what? The manufacturing sector for sure.
Yeah. So we are seeing what is considered a manufacturing recession, which is a decline in output for 2 quarters in a row.
And there's a lot of jobs at stake there.
But hiring has not declined. I mean, so we've still added some manufacturing jobs.
Right. The last jobs report, I think, showed
we've seen this decline in output.
There were a few thousand additional jobs in manufacturing.
So that's puzzling.
It is puzzling.
What is going on there is if the companies are still hiring people, that means they think the decline in output is temporary, and they think the future looks pretty good, which is why they would still be bringing people on. They could be wrong. If they think that, they could be wrong, and maybe demand will decline in the future. But I think if you're in a sector of the economy or a company that provides stuff for consumers, you see strong demand. And
that's your gauge. And the consumer has definitely been powering whatever growth we've been seeing here in the U.S. Okay, so you and I are trying to put a timeline on something you can't put a timeline on, which is
we can certainly guess,
but we can have fun guessing. So a lot of the people I've spoke to.
Let's just be clear, so that people can come and throw spitballs at us in a year. So you are saying we will be in a recession about a year from now?
Mild recession by Q3.
Mild recession.
Q3 of next year.
And I'm saying we won't. So now, we don't disagree about much. So we have
there you go.
A gentle person's disagreement on this.
But economists, there was a recent survey that showed most economists believe we're in for a recession by 2021.
Yes. So this is the National Association of Business Economists, and this is economists who work for big companies. And I think there's a quarterly survey. So these numbers are kind of interesting because they were actually a little more pessimistic earlier this year when they took this survey. So I'll read a couple of statistics without boring everyone to death. But so when they asked the economists in February, do you think we're going to have a recession in 2019, this year, 10% said yes. But when they asked them in July, only 2% said yes.
Wow, that
really they were
fell.
That group was more bearish about this year than they are now. So they were kind of wrong. That's only 10%. So at any rate,
but at the same time, may I interject? The trade war has intensified.
That's right.
So go figure.
So why are they more optimistic? They should be more pessimistic, shouldn't they?
You'd think.
Anyway, so 40%, 30% think we'll have a recession by 2020. So you put those two together, that's 40% who think we'll have a recession either by this year or by 2020. That's the Trump reelection scenario. So fewer than half think we're going to have a recession by the time Trump is up for reelection. Another 34% think we will have a recession by 2021. If Trump wins, that would be the first term of his second term. But I honestly, if we have a recession in 2021, well, the economy will be cooling in 2020. It'll be weaker than it is now. And that might be as bad for Trump as an actual recession scenario.
Mm-hmm, mm-hmm. Now, in this survey, I also found it interesting that these economists felt like things were pretty good on the fiscal policy front, 37% thought, you know what, things are right just where they are. And they were even more bullish on the monetary policy.
So I'm looking for my chart.
Right now.
And so I think you're right. I think 37% said, sorry for the shuffling of papers, people. This is just the sound of journalism being conducted.
In real time.
So fiscal policy, which is government spending and government taxation levels, 37% say it's about right, but 51% say it's too stimulative, which means the government has cut taxes too much or spent too much money. And that would only be a problem if you're running up deficits in order to do that. But guess what? We are running up deficits. So Trump is going to have a $1 trillion deficit for this fiscal year that ends in September. That's appalling. We've only had trillion-dollar deficits during deep recessions before. When the government is supposed to borrow money in order to spend it to get the economy back on its feet. You should not be doing that during if the economy is strong, but we are doing it. And then on monetary policy, which is the Fed, about where's the number here? More than half say 62% say the Fed has got it about right. That seems about right. I mean, we know the Fed is now in a modest loosening cycle. They're cutting rates a little bit, maybe a little bit more. We don't know. But something's not right when the short-term interest rates get no higher than 2.5%, which is where they peaked, and the Fed starts to get so worried it starts cutting rates again.
No.
Normally, when the Fed has started to cut interest rates out of concerns about a possible recession or an overheating economy, when they do cut rates as a stimulus measure to help get us out of a recession, they normally cut by about 5 percentage points. And we're only at 2.25% right now. So 2.25 is the most the Fed could cut if we got into a recession.
Unless they want to go negative, like a lot of the rest of the world. But
yeah,
I doubt that would happen. That would not happen.
It's hard
they bring
to
us down
imagine
to zero,
the Fed
and that's where we
going
would sit.
2 points negative. I mean,
yeah.
But
they don't have a lot of weapons in the arsenal, and they know that, and they're not going to go back to QE.
This is one of many instances where Trump is saying consequences be damned. I want lower rates right now. He wants lower rates right now because he thinks that'll help him with re-election, and he doesn't care if it's premature, if it's going to leave too little in the toolbox for the Fed when it actually needs to combat a real recession. All he cares about is re-election and getting those rates down now. We'll see if he gets it. He will probably get lower rates, somewhat, but not all the way to zero by the time of election day. But I'm not sure that's going to matter. I'm not sure. Let's say the Fed ends up cutting a total of a point. So it's already cut by 1/4. Let's see if we get 3 more 1/4 points or something around that. Will that make a big difference? I mean, in terms,
it could make people feel better about going out and getting that mortgage, getting the car loan.
It will lower the cost of
borrowing money. But if they don't feel confident their job's going to be there because of a looming recession, then maybe they don't go out and take out that loan.
The other way this can help is it really has to work its way into long-term rates. But we do have long-term rates coming down for a variety of reasons. And when rates get as low as they are right now, that's an incentive for people to buy stocks, because to just take a gamble on stocks because you're getting no return on bonds.
Right.
But if this all happens for the wrong reason, it implodes. And if the wrong reason would be the Fed is doing these things because the economy is weak. So if they're doing it to keep a strong economy strong, it might work. If they're doing it because the economy is weak, it probably won't work, because if the economy is weak anyway, a couple of interest rate cuts aren't going to prop it up. We're going to have to go through the cleansing of a recession.
And that's a good way to put it. You do need to cleanse every few years, and it's been quite a while since we've had a recession. Not that I'm wishing one, but a lot of the economists I talk to say we are probably due for some sort of a pullback. You also have to think about another indicator when it comes to timelines for a recession. And we've talked a lot about the inverted yield curve. And recently it was the 10-year and 2-year notes, their yield curves inverted. The 10-year was below the 2-year for a while. Earlier in the year, the 10-year was below the 3-month for a while. And the indication is for the 10-year and 2-year, the relationship there is we usually see recession anywhere from 9 months after the inversion to up to 24 months. That's quite
and the average is 21 months.
A lot of lag time. Right. So I think it puts the recession right in between where you and I have been talking throughout this podcast, somewhere in the mid to late 2020 into 2021. So thank you, all you economists out there with all your fancy numbers. But perhaps you're right. I mean, you said in another podcast recently, the bond market doesn't lie. And the bond market really may be signaling something here.
Well, it's a very tentative signal. So as we sit here, the curve that matters, the yield curve that matters most is the 2-year compared with the 10-year. And that inverted for what? A couple of hours?
That's it.
One day?
Right.
And the market did not open with an inverted yield curve, and it did not close with an inverted yield curve, but it happened for it. So it's like
it's like a blip on the radar.
It's almost as this is like a medieval portent. Oh my God! It inverted. Run for the hills! Like
sort of was like the Dow fell 800 points. Yes, it was sort of like run for the hills.
You know, we're reading entrails here at this point. I'm not buying that an inverted yield curve for 2 hours. It can be a meaningful.
So it needs to be sustained,
symbol.
And even the Fed has said this. You know, Bullard with the Federal Reserve has said it needs to be a sustained inversion for it to really mean anything.
So economists don't know. They honestly don't know on this. So this is a highly reliable recession indicator that has correlated with every single recession of the post-war era. But it has not happened in an environment where interest rates overall are as low as they are right now.
That's the difference.
So that means we have a compressed scale of interest rates. And I mean, economists don't fully understand that. I mean, they don't really understand why interest rates are so low, why we haven't had inflation. And a corollary of that is, does a yield curve inversion mean the same thing when you've got interest rates compressed so much as they are right now to start with? Or does it become less meaningful? I'm kind of inclined, if it was just that 2-hour period on one day, I'm inclined to dismiss it, honestly.
A number of economists I've talked to feel the same way.
Yeah.
And they say because all the external factors this time are different than prior times during inversions.
Famous last words, this time is different.
This time is different. Well, we'll have to see.
And it almost never is.
Yeah.
But you know, I mean, economics is not a hard science. I mean, these are not inviolable rules the way rules of physics are inviolable. That is not the way economics works. Consumer behavior has a lot to do with it.
We're always, as investors, we're looking for guidelines.
Yeah, right.
Right, and this is at best
I'll tell you what, it freaked out the Trump administration. And it freaked out, the stock market for a little while. But God, the stock market has such a short-term memory. I mean, it came roaring back. Oh my God, the recession indicator is on, and then 3 days later we see the rally, and who cares? And by the way, if the recession indicator is right, the recession's not going to happen for 21 months on average. What are we supposed to do in the meanwhile?
I guess have a volatile stock market.
How do we spend 21 months preparing for a recession?
Yeah. Well, you know what?
It's almost like could we just get the recession started?
This was a little
and get it over with.
If the report was right in the Washington Post, President Trump, one of President Trump's favorite publications, wink, wink, in which people within the administration were saying, we're not preparing for a recession. Shouldn't an administration always be preparing for the worst case scenario? And shouldn't that be comforting to Americans?
They should be preparing for the worst case scenario, but they should not be telling anybody they're preparing for the worst case scenario.
Too much transparency, Rick.
I'm not faulting the White House too much on this one. We have heard President Trump's two happy talkers, Larry Kudlow and Peter Navarro. Trump could do no wrong. Larry Kudlow, formerly a free trader, now a full-on protectionist. The guy who said in December of 2007, which is exactly when the last recession began, I see no recession anywhere near on the horizon. Now he's saying the same thing. He was wrong then. I mean,
but this time's
there's
different,
no reason
Rick.
We should believe him now. This time is different because he's in the he has a job in the White House protecting the president whose reelection depends on there being no recession. So he has less credibility now than he did have in 2007. These guys have to say this in a way, even more so at this president. We know that President Trump requires you to sell your soul the moment you step into the White House and say whatever's necessary to make him look good, even if it makes you look like an ass. I think Navarro and Kudlow are going to look like asses before this term is over. I think it's highly possible, put it that way, because they're saying things. Peter Navarro is predicting a bull market into 2020.
Right.
He's the president's top advisor on trade. Just wait till that doesn't happen.
Maybe they think if they say it enough, it'll just be.
It doesn't work that way. Doesn't work that way.
Well, don't you go selling your soul
and there becomes
to anybody, okay?
Well, the White House wouldn't hire me, so even if I begged them. So it's fine to say things like that now, But what Trump and the risk for Trump and all of his economic advisors who keep saying strongest economy ever or things look great is that if
and the
things
superlatives, it's the best ever.
That's right.
It was never better than this. It's not true.
If things do turn down, they have no credibility. So if they say, okay, we do acknowledge that times have gotten a little bit tough. Here's our plan. Who's going to believe them? And what are elections all about? Elections are about what voters believe in the candidates. Do they believe the candidate will do a better job than the prior candidate? Do they believe the candidate will make them better off than they have been for the last few years? And if Trump and his advisors and his proxies just get caught basically trying to happy talk a recession, Trump has no chance. I think Trump is going to lose no matter what. But
whether we're in recession or not, you don't think Trump gets reelected?
It obviously depends on who his candidate is, and we should do another podcast on this, maybe. But I think he has no chance.
All right.
I shouldn't put it that way.
You know what? You're in luck because we have more podcasts, and we can make that one of our topics. I'm going to rephrase what I just said. Okay.
I should not say he has no chance. I think it's highly unlikely he can win.
We're going to hold you to it.
It's fine with me.
All right. Listen, we want to thank everybody.
I get spitballed all the time, whether I'm right or wrong.
I know you can, and we appreciate you for that. Thank you, everybody, for listening to Ballots and Dollars this week. You can follow us on Twitter at Alexis TV News.
Rick J. Newman.
Head on over to wherever you get your podcast. Be sure to rate this one very highly and look forward to next week's new episode.
Is highly stimulating a rating they can give us?